REDFIN with breaking news. REDFIN just highlighted that listings are piling up as buyers stay on the sidelines. Folks, this is breaking down exactly how we expected in the housing market. We are entering a time where obviously there's high prices, high interest rates, but more importantly, we have kicked off a level of uncertainty that hasn't been seen in decades, perhaps almost 100 years with these tariffs. Again, something else we have to remember is demand destruction can lead to deflation. It will be interesting to see how this breaks down in the housing market, how long buyers can stay on the sidelines. Will rates fall in anticipation of the Fed cutting? There is lots and lots of things going on in the economy, but it is clear that our call that 2025 should be the lowest year for transactions, probably going below 4 million for existing home sales, is once again looking to be a pretty wonderful call, frankly. Let's talk about demand destruction. Let's talk about deflation. Let's talk about how you and I can really kick off deflation in the economy. Probably the largest sector that is currently feeling the deflation vibe, or at least risk of deflation, is the travel industry. I've read a couple of articles about places like Vegas in California and the like. U.S. destinations have reported a significant drop in tourism. This drop in tourism is first from Canada, from Europe, and also domestic. What you are seeing is airlines reduce flights. You are seeing hotels offer up promotions. And this is where deflation comes in. If travel, again, this is spring selling season heading into the summer, which is supposed to be a big travel boom. If we continue to see light bookings, light reservations, guess what happens? Hotels and airlines will start offering discounts. You will see airlines maybe like Southwest or other carriers do 2-for-1 sales. You will hear hotels say, book 3 days, stay for 5. You will see these things. And this is, again, something that I believe the Fed has missed. The Fed has over-rotated to inflation. All right, obviously these crazy tariff numbers will be, inflationary should they hold. However, I think they are failing to realize the demand destruction domino is falling, and then that will lead to suppliers cutting prices. And if this goes too far, the next thing that will happen when people cut prices, folks, if you're not paying attention, is layoffs. The biggest switch or lever that executives have in companies when they have to eat margin is whack headcount. So you could see layoffs, probably not for several months now, but realize that demand destruction is a vicious spiral, negative feedback loop that ultimately ends in layoffs and probably a significant recession. Let's talk about some economic analysts or econ analysts out talking about recessions. I found this from a Bank of America survey. Bank of America survey said 80% of fund managers, so 4 out of 5, fund managers see the trade war triggering a global recession, which is pretty crazy. Global recession. Specifically, Mark Zandi says that we have a 50-50 chance of having a global recession, but regardless, 2025 will be a difficult year for everyone and suggests buckling up. JP Morgan puts the odds of a recession at 60%, says that the unemployment rate might spike to 5.3%. Folks, that is demand destruction. That is layoffs. That is a problem. And then, not to be outdone, Torsten Slok puts the odds of a recession at 90%. 90. That is the highest on the street. That is 9 out of 10, said a different way. And basically, Torsten is saying, folks, all you have to do is look at small businesses. Small businesses are the backbone of the economy. They make up a lion's share of employment, and they do not have the balance sheet, the ability to borrow to get through an air pocket in the economy. So again, according to Torsten Slok, we have a 90% chance of a recession. I do want to shout out PTO for Life. Again, Jeff and Suleika, they were once again featured in Business Insider. And I really appreciate the message. Slow and steady wins the race. If you don't know about PTO for Life, Jeff and Suleika, you are truly missing out. These two chose to house hack once a year for almost a decade, and they earned financial freedom in their 30s. Now, of course, they had to make a bunch of sacrifices I honestly could not make. But hey, plenty of people can. Plenty of you should frankly follow Jeff and Suleika's model and just house hack 8, 9, 10 times and be financially free in a decade. It's an amazing model. Shout out Business Insider for celebrating the success of those two and really highlighting how you can do it as well. Speaking about earning financial freedom in their 30s, I don't know if you caught this yet, but I did an interview with Mindy out of Kansas City. She earned financial freedom at 37 with only 10 doors. Folks, I want to continue to highlight new faces and new voices. If you know of someone out there who you think should be featured on One Rental at a Time, make a recommendations. Send me an email, tag me on Instagram, whatever you want to do. I am all about celebrating folks, slow and steady, folks that get there with a handful, because we need to encourage folks to get there. Without stealing the thunder from Mindy's video, which you should check out, went live yesterday at 1 p.m., I think. She earned financial freedom at 37. She was laid off, which really allowed her to go crazy, and now she has 24 units like 5 or 6 years later. So again, nothing crazy, no syndications, no this or that, just put her head down and made it happen, which was pretty cool. Let's talk about the key economic numbers of the week. First off is ISM services. On Monday, we already got the number. It was reported about an hour ago. It was estimated to come in at 50.3, had a slight beat, came in at 51.6. 51.6, generally speaking, means that GDP will grow about 1% for the year. Again, anything below 50 would be actually contraction. So again, a slight beat there. Tomorrow, we get U.S. trade deficit. Wednesday, we get the Fed rate decision, which is really a nothing burger. Last time I saw, there was like a 3% chance of a May rate cut, which I think is crazy high. I don't know how you get a May rate cut, but that's okay. I think what we're going to have is Powell's testimony, or Powell's press conference will be the market moving. Will he give any hints of a June or July rate cut? That will be what we look at. Thursday, we will get weekly jobless claims. Remember, folks, last week we jumped to 241 or 244. So are we still over 240? Are we back at the 220? We need to pay attention to that. And then on Friday, we are out of the quiet period. The Fed will be speaking again. We have 7 Fed speeches on Friday. As far as earnings go, we're still in earnings season. We do get Palantir and Ford today. Tomorrow we'll get Ferrari, Marriott International, AMD, and Wynn Resorts. Wednesday, you get Uber, Walt Disney, Dutch Bros, and Carvana. Thursday, you'll get Coinbase, Shopify, Pinterest, and Lyft. And then Friday, Air Canada. I guess what I am most interested in is probably Wynn Resorts, maybe Marriott International. I want to know what's going on with travel, entertainment. I want to know what's going on with consumers. I want to know what's going on with the top 20%. To that end, maybe Ferrari would be interesting, right? Because again, what are the wealthy doing? Are the wealthy pulling back? Are they building cash reserves because they expect to have some tremendous opportunity? Or are they still out partying like it's 1999? We are seeing more and more retailers jump on these tariffs. Some retailers are starting to advertise buy before tariffs. Again, they are trying to goose demand by getting consumers to buy before tariffs kick in. Saw an interesting stat or tweet from Resi Club. If you're not following Resi Club or Lance Lambert, you're missing out. He highlighted the top 5 markets with inventory growth over 2019 and 5 markets with inventory below 2019. Coming in number 5, these are the markets with inventory over 2019 levels. See if you see a trend. Number 5, San Antonio. Number 4, Orlando. Number 3, Memphis. Number 2, Austin. And surprisingly, I don't think I would have guessed this. The number 1 market with the most inventory above 2019, Denver, Colorado. Denver, Colorado came in number 1. I probably would have guessed Austin, but would have been wrong. How about the 5 markets with inventory below 2019? Number 5, Cleveland, Ohio. Number 4, Virginia Beach. Number 3, Chicago. I don't know about you, but I'm surprised Chicago's on that list. Number 2, Providence, Rhode Island. And drum roll, please, number 1, Hartford, Connecticut. Again, I don't think I would have guessed Hartford, Connecticut. I probably would have guessed the Northeast. Again, we're seeing still a relatively seller's market up there. But yes, Hartford, Connecticut came in number 1. Looks like China is truly on a path to potentially deflation. Folks, I don't know if you're putting the pieces together yet, but obviously the United States is the largest consumer of Chinese goods. There is essentially an embargo between us and China going on right now. So what happens? What happens to all those goods? Well, obviously they will try to sell those to Europe and otherwhere, but really what they need to do is they need to spur consumption. They need their citizens to buy more stuff, right? Made in China, right? Have the Chinese buy made in China. Unfortunately, that can lead to a deflationary spiral as they will have to discount to sell products. So again, this trade war is heating up. We are starting to see ramifications or cracks, frankly, on both sides. And yeah, it will be interesting to see where this goes. Don't forget, folks, that Steadily, Landlord Insurance from Steadily is the sponsor of the Daily Financial News. There's a link below. If you want to get a quote, you want to build your buy box and get some costs, Steadily has helped me repeatedly, as well as many ORET folks. It's not the right solution for everyone, but it's always good to get a second opinion, see if they can give you better prices and better rates. Check them out, see if they can help you. Also, since we're talking about that, let's talk about school and our newest member, John. John is signed up and to 67 pennies a day. Make sure you introduce yourself, John. Get to level 2, level 3, unlock the thousands of dollars in education. Join one of the 6 accountability groups, and we'll see you on Sunday. I go live Sunday morning at 8 a.m. Trump is out once again saying he will not replace Powell before his term's up. Obviously, I think the bond market has really shown him that that's not a good option. So expect Powell to be in his seat until his term is up. Jeremy Siegel is saying, I was hoping for trade deals would be announced by now. You and me both, Jeremy. And he says that he doesn't think the impact has hit us yet. Again, I've talked to a lot of people in kind of supply chain, and they're all talking about late May, early June as when this might occur. Folks, that's what I got for you today. One more thing. Oil. Oil is down. I'm actually surprised by this. Sometimes I don't get it. So you obviously know oil has been at or below $60 a barrel for quite some time now. But apparently OPEC Plus has agreed to surge production. So let me get this right. You operate in a market where prices are down because demand is down, and you choose to add more supply. Good idea. Not usually a good idea, but hey, given the fact that oil is in everything, given the fact that President Trump would like oil down, heck, why not? Produce more. Let's get oil down below $50 a barrel, 45, whatever you guys want. the lower oil prices get, the better it is for the U.S. economy. So go nuts. Folks, I hope you have an amazing day. We go live at 7:30 a.m. to do the daily financial news. Feel free to check us out. 175 of you are watching this live. I just want you to know I appreciate you. It is always fun for me to look in the upper left corner now, 180 people watching, and see all of you there. Thank you. Thank you for all your comments. I see them here. You know, we got Sarah's out there saying hi, financial firefighter, all-nighter. Again, lots of people out there just doing some great stuff. Just highlight you guys. What else is going on? Let's scroll above, see what else is there. Oh, people talking about that interview with Mikey yesterday. Mikey went out at 4 o'clock, I think. What a wonderful discussion. Folks, take care of yourself. Have a wonderful day. Like, subscribe, comment, and you know what? Share this channel with one person today. Share this channel. Send them an email. Send them the link. Tag me on Instagram. Let's grow one rental at a time, one person at a time. Thanks. Bye.